Now, traders say they expect rates to increase today as banks fund for the 296 billion bond auction debit. Dimeji Obasa, team member at the Axis Bank's Treasury coverage, joins me to this for a midweek update on sentiments at the fixed income market. Thank you, Dimeji, for joining us today. Before we start with a summary of how the market has traded so far, bring us up to speed on trading action today at the bond market.
Having me. Essentially, what we've seen today is, mostly buying sentiment, particularly for market participants that have unmet demand from the bond auction that was held on Wednesday. So we were just basically seeing them trying to fill that unmet demand in the secondary market.
But how would you describe trading since Monday sentiment on the part of investors?
On Monday, it was pretty much quiet because of the auction, given that market participants needed to just get a sense of where the auction would close. On Tuesday, we started to see some of the unmet demand from the auction filter into the secondary market, and that is the same thing that has been playing out today as well.
But how would you also describe market liquidity?
So it's very low. We've seen significant reduction in liquidity for the week. And that is why we expect that the money market rates are supposed to sort of increase today as banks seek to fund for the bond auction debit that is scheduled to hold today.
Let's talk about the yield curve. How would you describe that, not even for this week, in the last 2 weeks? What's been the trend?
So the trend, we still have an upward sloping yield curve across the benchmark bonds for the Nigerian securities. What we've seen, however, which has been the trend from the beginning of the year, has been, just reduction across board. We've seen the reduction in the, shorter end of the curve. That's the 1 year securities filter into the bond markets, where we've seen demand essentially drive yields lower.
All right, let's expand this conversation a little bit. Now, last year we did see a good amount of corporate floating commercial papers. We did see a lot of a good amount of activity at the corporate bond market. But this year we expect the federal government to embark on some heavy borrowing at the domestic market. Talk to us about what this means for corporate bonds, what this means for of course floating commercial papers, and the benchmark, the rates that we could possibly see.
Okay, so it's still going to boil down to demand and supply. Yes, the federal government is expected to come into the market this year, which is what they've been doing at all the monthly auctions, and they have been selling above what has been on offer. Despite this, we've still seen a reduction in rates, and it's basically because there's significantly more demand than the supply that the federal government is able to bring into the market. Yes, we expect them to come into the market, and we foresee that the rates should inch up, but the high point where the rates will go is anybody's guess, but we expect rates to go higher as the government comes into the market a lot more later on in the year.
Well, speaking about rates, I know that for the 1 year paper, the treasuries, that's been, correct me if I'm wrong, just under 5%. And in the last couple of weeks, since the beginning of the year, I've talked to traders about a possible resistance point on the part of investors, of course, looking at where inflation is, negative real return, and of course the volume, the sheer volume of borrowing by the Nigerian authorities, and at what point investors are going to push back and begin to demand higher rates, for all this borrowing. But I know that of course options are limited. But what can you say to that effect?
To be honest, it's an anomaly at the moment. What we see is we're still waiting for that market resistance point. The idea or the thought at the beginning of the year was, maybe if rates gets to 5, we'll see the resistance. Now we're at 4 levels. In the secondary market, these long end bills are even trading below 4. So the point of resistance that we foresee keeps changing, right? So yes, we are currently in a negative yield environment, particularly on the short end of the curve, more so with the impact of the corporate income tax that is, the corporate income tax waiver that expired earlier on this year, right? So we expect, or we hope that the resistance point is near, and then we can see a sharp reversal going forward. But because of the demand once more, is significantly great in the market. So what we are seeing is investors are willing to still take on these securities even at these low levels.
Okay, now what is your forecast for the rest of the week in terms of from a liquidity point of view? Are we expecting mop-up activities from the CBN or new issues? What can you tell us?
With regards to the market, liquidity is expected to remain low for the rest of the week. For activities in the fixed income market, what we foresee is basically rates staying relatively stable from as where they are currently, just as market participants try to meet the unmet demand from the auction, and some of those other market participants who were allotted from the auction seek to take profit. So we see rates staying relatively stable in the fixed income markets, and market liquidity is still remaining low going into next week.
Okay, just one last question. This is for the FX markets. Are you able to tell us, demand and supply dynamics? I know that there's still some tightness at the INE window.
So that remains there. That remains, the demand-supply dynamics remains the same. We've seen demand significantly outweighing supply, and nothing really has changed. As of yesterday, the INE closed at 417. But still we see demand greater than supply.